trading gold is better than Euro USD, you will have to fail before you can actually get yourself up. I always say this, if you're to get everything wrong in trading, just get risk to reward right. Hello guys, so I've been trading for the last 7 years now, and during this period, of course, a lot has changed. I've transformed a lot as a trader in terms of my perspectives, both in the markets and even as a person. And it's very interesting because some of the things that I probably went through in my early stages of developing myself as a trader, when I look at them right now, my perspective is completely different. And I think anyone who's still struggling with trading, or you're still in your early years, this video will be very helpful to you. So today I want to share with you some of the top lessons I've learned throughout my 7-year trading journey. The first lesson for me has been trusting the process. Now, when you start trading, it won't be any easier, and no one actually became a profitable trader without going through the same phases of blowing accounts, struggling to learn a few concepts and wondering what am I going to apply in the markets, juggling around different things before you can even find your own strategy. And sometimes it feels like a very dark place to be. But what I've come to learn is you almost have to go through that fire before it can shape you into becoming the trader you want to be. So trust you me, that trader, that version of the successful or consistent trader you have in your mind will come only after you've done those mistakes, blowing those accounts, trying out different strategies, doing a couple of trial and error. You will have to fail before you can actually get yourself up. One of the best things about trading that I discovered with the process of becoming successful is that it's so progressive to the extent that as long as you can learn from your mistakes, you'll always be making one step forward. That's why if you're a trader and you keep an active journal, you'll easily discover every time you journal your trades and you record the errors you've been doing and you be intentional about not repeating them. Slowly by slowly, your trading just starts to improve. So if you're going through any dark time in your trading journey, just trust the process. Make sure you're putting in the right steps. That's all that matters. As long as you're putting in the right work on a daily basis, you're collecting that data, you're journaling your trades, you're putting in a lot of chart hours on a daily basis, it's just a matter of time before you can start to understand more about yourself in terms of what is your personality in the markets. You'll start to easily figure out, I prefer to be more of a scalper than a swing or a day trader. You'll start to figure out that maybe I'm good at trading this price action concept as compared to this one. You'll start to easily figure out that I'm more consistent when I trade certain markets as compared to others. And eventually all these things will assist you into growing profitable and becoming that trader that you envision. So if I was to go back in my trading, I would definitely trust the process. I'll just make sure I'm putting in the right steps and allow time to take its own course. My second lesson has been quality over quantity. Clearly, you know that in trading, less is more. Or if I'm to put it in a different perspective, if you try to build a system that is focused on taking so many trades, you might easily find yourself that with more trades, there are more errors, your winning trade might reduce, and the chances of you taking low quality setups is very high. On the other hand, if you build a system that is focused on eliminating poor quality setups, you will remain with fewer trades, but then most of them work out well. Your winning rate will probably increase, and you'll be taking fewer setups but more quality and potentially making more in the markets. So early in my trading, it was actually the opposite. I used to believe that I need to take many trades on a daily basis for me to actually make more money. But I discovered with more trades, you easily make mistakes. With more trades, you easily compromise the quality of the setups you are taking. With more trades, you easily find yourself emotional over trading. You don't know when to stop taking those setups in the market. It's only after I focused to start to refine my setups, focusing on quality only, that I started to see a huge shift in my trading. In fact, one of the things that I do nowadays, whenever I'm building my trading systems, that is backtesting my strategy and trying to refine my data, I really focus on my losing trades a lot. And my goal is usually to try as much as possible to eliminate some setups from the losing trades. So I always want to try and spot, is there any consistent pattern which shows me if I eliminate maybe taking these trades at these times or at these levels, then I'll take fewer trades, but then we shall have fewer stop losses as well, meaning our win rate will increase. So that's one huge lesson that many traders need to learn, because I can't tell you how many times I've traded for 3 to 4 times in a month, and I've still had like a 12% month this year. I've had a 9% month. This month I'm currently up about 5% in just 2 trading days. And the irony is you meet other traders who've been trading on a daily basis, but they're still blowing their accounts, they're still in drawdown, they're still struggling to make any money from the market. So it shows you that the fact that you're trading on a daily basis or taking so many trades doesn't always mean you're taking the quality setups. So as you grow in your trading, I'll advise you as much as possible to focus on quality over quantity. Also, with fewer trades, you get enough time to anticipate them before they happen. You get enough time for you to do other things apart from trading. It's also easier for you to be stable in terms of your psychology when you are taking 3 trades a month than when you are taking 2 trades per day. So in my own opinion, it's for the overall good for you to refine your setups and only focus on few but quality. My third lesson is all about risk to reward. I'll tell you this, risk to reward might be your edge in the markets. Regardless of the system you're building, there's a very high chance, I think 90 to 95% of the time, you'll discover it's not very easy to find a system that gives you 70, 80, and 90% win rate consistently. Now, there's some traders who will come and show you, yes, I had an 80% win rate, but I'm not talking about you having an 80% win rate for 1 month or 2 months. I'm talking about a 1, 2, 3 year period where your system can prove for you it will be giving you that 60, 70%. Most systems, actually, when you're building them, you'll notice that the win rate is not always very high. So then that is where risk to reward comes in to help you find your edge. With a 30% win rate and a 1:3 risk to reward ratio, you are still profitable. Meaning out of every 10 trades, you lost 7, only won 3, but you still made money. And that is one of the craziest things which I think, once you understand very well, it almost becomes impossible for you to say you can't make money in the markets long term. Even myself, whenever I got into a deep drawdown like 3-4%, which I think I just had one last month, I had like a 3 trade losing streak. I'm not usually so frustrated, I'm not so stressed up about the drawdown because I know I just need one setup to recover all these trades. You can't say the same if you're trying to do a 1:1. So risk to reward sometimes is actually what creates the whole difference. I think if you take risk to reward out of many strategies, you'll find that strategy will struggle to even make any money. Once you understand that risk to reward is your edge in the market, then you'll also know the importance of now holding your trades, not interfering with them, and allowing them to run to their full potential. Because most traders have this issue where your trade is running into a 1:1, you're so quick to cut it off. You want to secure that small profit, while that trade could have easily done a 1:3, 4, or even 5. Once you get to a place where you understand that risk to reward is actually what gives me the edge in the market, you'll start to understand how even your psychology will start to become a little bit stable from the perspective that you won't be so tempted to close that trade early, because now you understand if I close it early, it means I'm affecting my edge in this market in the long term. So for me, I do a 1:3, and for sure, if I switch from doing a 1:3 to a 1:1, automatically I stop being a profitable trader. So you see, even in the markets when I feel the need to close my trade early or prematurely, it's very easy for me to understand that I'm destroying my edge. So I have to fix my mind, I have to fix my psychology, and just hold through, allow that trade to do whatever it will do. And what I know is that as long as I'm doing that, long term I do have my edge in the markets. I always say this, if you're to get everything wrong in trading, just get risk to reward right. Trust you me, even if you get the trend wrong, if you get the direction wrong, if your strategy is struggling, but somehow you just make sure the day that I win, I'll only be targeting 3 or 4 times, you'll be surprised that you'll probably be even a break-even or a profitable trader while still having a very flawed system. Now imagine having a good system. Imagine now being at a place where you understand what you are doing, you can read the price action very well, you know when to get in, when to get out, then you add up the risk to reward in your system. You see, you get to a point where regardless of the losing streak you have, it's almost impossible for you to not just make money in the long term. Now, before we continue, let me introduce you to Prop Firm Match, the one place where you can do due diligence for any prop firm you're looking for, whether it's a CFD firm or a futures firm. Just by a switch of a button, you can go all the way from the CFD to futures. And the comparison you can do here is in terms of filtering what firm are you looking for, the platform that they offer, the countries that they are available, the max allocation, the program types that they do have, and most importantly, if these companies have any discount or any offers which are running, you can always find them listed on Prop Firm Match. If you're a futures trader, for example, here are some of the top futures firms we have on Prop Firm Match right now. You can see the number of favorites depending on the traders that have been using them, and if you are to click on any firm like this, you can find further details about the years in operation, when was the firm created, who's the CEO of the firm, if they have any discount, like currently we have 50% off on this futures firm. You can take the code here and use it as a coupon for you to get that discount. You can also see all the platforms that the firm allows you to trade with. What is the payout policy? You can simply see what you need for you to be eligible to get a payout with this firm. What are the firm rules? Do we have any consistency rules depending on the model you want to go for? So be sure to check out propfirmmatch.com. I do have their links in the video description. That said, let's get back into the video. The fourth thing I've learned in my 7-year trading journey is data collection is the answer to all the questions you have. I can't tell you how many times I get these questions of, Rick, what stop loss should I use? What do you think is the best pair? What do you think is the best risk to reward ratio? Now, I understand because even when I was starting out trading, I also used to think there is a generic answer to these questions. I used to think that there is one specific answer. For example, using a 1:3 is better than a 1:4. Trading gold is better than Euro USD. Using a stop loss of 15 is better than using a stop loss of 30. You almost think there is one specific good answer that you should be given for that question. But the truth is, data collection is the only thing that will give you those answers. So if I were you, I'd stop trying to chase, a trading guru online or your mentor or anything, hoping that they're going to give you that quick fix that you can't get inside the market. So whatever question you want to ask, I always say this, make sure you first of all dig into the markets, you've done your research, you've collected your data, then come back and see whether you'll have the same question. Because when you collect data, it will help you to see on this market, my stop losses have been working well. If I put them at this level, maybe it's based on the structure, maybe it's based on the liquidity, whatever concept you're using, your data will help you to know the best level to put that stop loss. Your data will help you to know what is the best time frame you need to use. Should I execute on the 15-minute or the 5-minute? You have to collect data to prove that. If I compare my results whenever I'm executing on the M5 versus the M15 or the 1 hour, which one of them is showing me the most optimal performance in terms of profitability? What is the ideal risk to reward I should be using per trade? Collect data to try to find out whenever I use a 1:3, a 1:4, which one is more likely to get hit. You must have seen most of my trades I usually do a 1:3, and I don't do that out of guesswork. It's because I had to test my system, and part of the things I noticed is whenever I target a 1:3, it's very easy for my intraday setup to hit that TP very quickly. But if I start to extend to a 1:4, it will hit sometimes. If I extend to a 1:5, it will hit sometimes, but then the probability of hitting it starts to go lower and lower, and some trades will have to run for 2 or 3 days. Some will go to a 1:4, then they reverse while I was still targeting the 1:5. So you see, I was able to get my answers. So one of the lessons I've learned, which I think every trader needs to understand, is spend more time with your data than you spend with your mentor, than you spend on YouTube watching the videos. Whatever videos you watch, it's nice, get the concept, but after that, if you're watching YouTube for 20-30 minutes, I think you should spend at least 3-4 hours now on your chart to just study it, try to collect data and practice. Usually you can collect data through 2 ways, of course, backtesting and also journaling. By journaling, it means you are keeping an active record of the trades you are taking just to track them and see, have I been doing anything wrong? How have I been executing? How do my good trades look like? How do my bad trades look like? And what can I do to fix or improve the trades? It's only through this process that you actually build and develop your confidence in the market. Even if I tell you, go use a 15 pip stop loss, but you didn't do any data collection yourself, if you go to the market and you hit 2 stop losses in a row, you'll easily start saying, this guy lied to me. Or you'll start to think, no, this stop loss doesn't work so well, let me try to move to 20. You move to 20, it works. And then again, you hit 2 or 3 losses, you tell yourself, let me change from 20 to 30. Why do you think you are easily emotional in the markets and making those mistakes? You are more uncertain because you have no data that is backing you up. So you want to get your answers from someone you call your mentor or someone you watch on YouTube who you think they are profitable. And the thing is, the best they can do is guide you, but you still get those answers only from collecting the data in the markets. The fifth lesson I've learned is time limits are your worst enemy in trading. One of the ways I always know that someone has a wrong perception about trading is they've not even started, but the first question they're asking me is, how long do you think it will take me to start making money? And when do you think I can make that money? And how much can I make as my first profit? Again, I always understand because even when I was starting, these are some of the perspectives I used to have. But as I've grown in trading, I've come to understand that you can't just have a time limit. All you need to make sure is you are putting in the right steps towards the right direction. Because the idea of time limit is most people have a short-term perspective where they want to hear that I'll make money within the next 2 months, 3 months, 6 months. You want to hear all those nice answers. Well, I'm not telling you it's impossible to make money within even your first month. Even your first week, you could be lucky to make money. 6 months later, you could have learned some transaction and make money. But really, have you got to a place of consistency in the market just because you made money for 1 month? Can you repeat the same process over and over, both on your small account and when you get a big funded account or your own, maybe big capital? Can you still trade it, manage risk consistently, go into drawdowns and still have stable mindset in the markets, recover your drawdown and still make money consistently? Now that's a completely different question. So I'll tell you, don't have time limits. If anything, you need to have a very long-term mindset in the market. The sooner you start having a long-term mindset, the more you'll start to put in the right steps, the more you'll start to commit more and focus on making sure you're doing everything right to build yourself into being a successful trader. So in other words, you start to focus more on process instead of when will I make my first money from the markets. Whenever you have time limits, it will be easier for you to start to look for shortcuts, because now you are 2 months into trading and you've not yet bought the car that you were imagining you should have bought by now. You've not yet made your first profit the way you were imagining, because your focus was, I want to make it within the next maybe 2 weeks, 1 month, 3 months. And that time limit will make you to start to overtrade, to over-risk, basically trying to look for shortcuts, thinking they'll help you to make more money, but you'll remain in cycles of doing those errors over and over. You'll become more frustrated and you'll just become liquidity in the markets. You'll just be losing every time and you won't have any growth over a long period of time. So I can advise you, don't have time limits. If you're still doing your job, continue doing it. If you still have another source of income, the better. If you don't have one, try to find one so that you can learn without feeling the need to want to make so much money tomorrow. But eventually when everything clicks, you can make so much money from trading, and I'm sure all of you know this. The sixth and last lesson that I'll share with you, which I've got from my 7-year trading experience, it's a very important lesson, which is simply, you can't copy your way up to profitability. When I say copy your way up, I mean you can't watch someone on YouTube and just try to copy their strategy, copy paste. The keyword here is copy paste. Can you learn from someone? Yes, you can. You can get the concepts from them. If anything, we all learn from someone, at least, whether you join a mentorship or you are just learning from free online resources. But the difference is now imagining, just because I've learned this person's strategy, that's it for me. I'll just copy paste it and I'll become a profitable trader in the long term. Best case scenario is that you might learn someone's strategy and you copy it, it works for a short period of time, then the market conditions change and now you discover the strategy doesn't work anymore. This is something that can happen in the market easily. Even myself, over the last 3 or 4 years, I've literally used close to 3 trading approaches. Some of them still work, but maybe they don't just work as well and you need to adjust a few things. So if all you're depending on is copy paste, let me just learn this person's strategy. I don't even want to understand the price action behind it. I don't want to understand the technicals or the fundamentals of what is driving the market. As long as I have their strategy, I'm going to make money. That is one of the biggest lies you are telling yourself, and the best case scenario, it will work for a short period of time before you find yourself not being able to make money with that system. And that best case scenario is very limited. It actually hardly happens. What will happen most of the time when trying to copy paste someone's strategy is simple. You won't even be able to execute it sometimes as well as this person does, because the person who built the strategy took a lot of time to interact with the market, to study it. That is why they tell you they enter here, they exit here, they know why their stop loss is at this level. So even when they go into a 2 or 3 trade losing streak, you will see them having the same level of confidence. Why? Because they put in the time to actually build the system. It's not a must for you to always build every system from scratch, but at least on the minimum, even if you're to learn from someone, you still need to put it to the test, try to personalize it, understand it in and out. So it's doing these things that will help you to actually be very familiar with that specific trading approach and do something that I always call being in synchrony with the market, or being in synchrony with the strategy that you are trying to apply. But you just can't copy someone's strategy and tell yourself, it's now a shortcut and I don't need to backtest because they already did the backtest on my behalf. And if you try to do that, you'll find yourself easily emotionally in the market. When you hit 1 or 2 stop losses, you are questioning, should I continue trading or not? When you see a setup unfolding in the market, sometimes you're not sure, should I take it, should I not take it? So learning from someone is very nice and I highly recommend that. But you only learn from someone so that it can be a shortcut in terms of you not having to do the same mistakes they did, or you not having to take a long route. But it's not a shortcut in terms of you not putting in the work that it takes to building yourself into being that trader. So regardless of who you choose to learn from, always understand you will still need to put in the work, and you just can't copy paste your way up into being a consistently profitable trader. So that's it. I hope you guys have learned something from this video. One thing I'll tell you is the more you trade, the more your perspectives will change, the more you'll grow, the more you'll develop yourself, and the journey just never ends. Because 7 years in trading, I think I still learn more about myself as a trader on a monthly or a yearly basis. If I look at my trading last year to this year, there's always 1 or 2 aspects that are changing in terms of improving myself. So even if you get to a point where you're fully profitable, there is no plateauing, the journey just doesn't end like that. You'll still be sharpening your skill and getting better with time. That being said, I'll end the video here. See you next time, guys. Peace.